Good morning, traders. Welcome to the live webinar with ecs.LIVE, of course, focusing on our SWAT methods. And we'll be taking a look at the markets for this week. Let's take a look quickly together at what kind of news events we could expect. Of course, it's always good to keep an eye on that and check whether any technical trades are being bothered by any fundamentals and news events. Let's see. Monday, nothing much. We have a red tagged event, one on Tuesday, some earning index in the pound. Wednesday, CPI for CAD and sales, retail sales for dollar, unemployment for the Aussie. Seems like quite a quiet week, to be honest, from a news perspective. All right, so yes, I had a good weekend too. Busy with baby things, challenging in its own right, but was good. We had a lot of visits. Everyone wants to see the baby, so it was fun. Let's take a look at MT4. Alrighty, so your dollar 4 hour chart is very messy. It is sideways, moving averages are on top of each other. And yeah, my gut feeling says that it could go up more than down, perhaps. But I mean, if we just analyze it from a technical point of view, moving averages here on the daily are down. So if it does break to the downside, it would be pretty good to break out. But it hasn't happened in a long time, and we're looking at already 8-9 candles not breaking this low. So that is not good for the bears either. The ECS candles have turned gray in the meantime as well. HMA is up. So, you know, although technically speaking, the downtrend is visible on the euro dollar, I really don't know if it's going to necessarily continue lower. And it might be best just to wait for that daily candle to confirm that. So that would mean a daily candle close below, let's check, 111.90 at the very least. All right, so probably a little bit more, maybe 111.80, 111.70. And we would get, if the candle closes near low, and we have, for instance, a SWAT candle, if you are using SWAT, then that could be a good confirmation that finally price is continuing lower, right? We had the bearish breakout here, and it just hasn't gone anywhere after this pullback yet. So that might change, but we would like to see a confirmation first. And we might not get that confirmation if today's 4 hour candle stays above the weekly pivot point at 112. Let's see, 112.15. Let's say if it stays above 112. So if you get a fractal here at around 112, then in that case, there's a fair chance that price is actually going to continue higher for a move up to maybe this very long-term moving average 610 EMA at around 113, 113.25. All right. In that case, price might retest this long-term moving average 144 on the 1 hour chart, bounce off of that. So one way to trade that continuation higher could be to wait for the break above the 21 EMA. Wait for the dip down and wait for the break. Or if it doesn't make this dip down, it's also possible. Let me check. It's possible that we might get a fractal right here. And but we don't have the fractal yet. So the advantage of if price moving lower first and then bouncing and then breaking above the 21 EMA is that there's a good chance that there's that 4 hour fractal. If it breaks above the 21 EMA right now, we don't have that. So it is possible to trade to the upside because on this 1 hour chart, everything is aligned to the upside. But if you look at my wave analysis too, there is a pretty strong resistance zone right here. So I think that seems risky to me. So I would probably not trade the 1 hour breakout now just because of this resistance zone. But if it makes a dip, decides to bounce at this support zone, and then break above the 21 EMA, then that would change things. Then in that case, I think there's a fair chance that the price might break through this 112.50 zone. I know this sounds maybe very complicated. It's just because the euro dollar is quite complicated at this moment. And I think it's a currency pair that we analyze intensively because it's the euro dollar. It's the one we follow very closely. But if it would be any other pair, I would probably discard this, discard it right away and move on, because it's not that interesting at this spot. Unless we have a very clear bearish breakout, it wouldn't be. 4-hour chart is really not that interesting considering the sideways correction. But that said, if we analyze it intensively, yes, maybe a bullish breakout on the hourly chart if we get a pullback and continuation above this 1 hour 21 EMA. The target is not too far because it is just, yeah, that's the space that we see. Using these tools is really, in this case, would fill up the zone between 21 EMA and 144 EMA, and 113.25 would probably be the first target to think about. 113.50 maybe. All right, let's take a look at this Kiwi. Ali is indicating if it's interesting to look for long setups near 65.70, 67.80. He indicates that some waves down have been completed after the 65.28 dip. And downtrend channel has been broken to the upside, and this could be maybe a wave 1. All right, very cool stuff. So let's take a look. A lot of details. That's great. So let's analyze the momentum, and trend is down, but true that you could consider this to be an attempt or a partial break. There are candles above it. The breakout candle didn't look that great itself. Some candles after that did push higher. If we look at the moving averages that we see, there is still alignment to the downside. This could be perhaps a wave A, indeed. And this could be a wave B, and up it can go for wave C. That's definitely possible. There is divergence on the 4-hour chart between these bottoms. So that could be one reason for price to go at least to the 144 EMA. That's the official target with divergence on 4-hour chart or higher. So that would make sense, indeed. The trendline break I don't think is that important, but yes, this was indeed the drop during the interest rate, and we saw the same on the Euro New Zealand pound New Zealand, a quick spike up, a lot of a big move, but also a big reversal in the opposite direction after price went initially to the downside on New Zealand weakness. Daily chart, everything is aligned to the downside, so it will be certainly counter trend, but counter trend trades are possible, and there is reason in the sense that price is at the support zone right here, and the daily candle had a wick as well. So certainly aligned to the downside, but there are good reasons to look for upside in the sense that price is at support. It could have finished an ABC down. It has divergence between these two bottoms, although that's not daily divergence. It's actually more 4-hour divergence. Let's take a look at the weekly. Weekly is a doji indicating indecision with a bigger wick at the bottom than the top. And I think it's fair to say that this is momentum and this is ABC correction. So it could easily be that the wave C is finished indeed. And price bounced off the 78.6 fib. So far I like the idea. I'm not a big reversal fan in general, but I think in this case, there are solid arguments and reasons to think about that. Let's take a look at the hourly chart. Only one thing I probably don't like is this pattern up so far. Let's take a look at the 15, because it doesn't show a clear 5-wave structure. That would be the best. If it showed a 5-wave structure up, then there's even better chance that this is an ABC down, and up it goes for at least one more 5-wave up at the very minimum. But that 5-wave structure is unfortunately lacking here. So that's a little bit of a disadvantage. But it doesn't mean that there couldn't be a bigger bounce up. It just means that maybe the full uptrend hasn't started yet. So one way from a SWAT perspective to trade it would be a break above the 21 EMA with SWAT blue candle, for instance, or SWAT arrow. And a break above 67 could be one way of trading that breakout to the upside. Another way from a reversal point of view could be to trade a bounce as it retraces here. We could put a fib from here to here. And look for a reaction at the 50 fib at 65.70, for instance, or 65.58. Look for either trade those fibs themselves, although that's riskier, it's counter trend, or wait for a candlestick reaction at those fibs, or wait for a time pattern reaction at those fibs, or wait for a bounce at those fibs, zoom into a lower time frame, and wait for a fractal break, a resistance fractal break, for instance. All of those are ways of trading, reactions to these levels. Ali is mentioning 65.70, 65.80, which is right here, right now. And it's possible too, if you really like the setup, it's possible. Those 8 pips don't really matter. If you are, let's say, less interested in it, you can wait to see if price could go lower and indeed hit that 50 fib in S2, right? But there's a chance you might miss that trade. So there's always that trade-off. But in the bigger picture, those 8 pips really do not matter that much. It depends on how much discount you want to try to get, right? Target, I think 66.38 is the minus 272 target. There's nothing wrong with the minus 272 target. Or the minus 61.8 target at 66.68. There's also the long-term moving average. Let's see what Ali suggests is 68. 68 is a little bit further. 68 is all the way up here at R3. And let's see on the daily chart, 68. Yes, maybe I would. I'm not. It's all targets are possible, of course. But considering the 67.50 round level and the long-term moving average, I would probably, if you want to aim for a bigger target, I would then probably aim for 67.50 myself. And stop loss is 64.80, is below the bottom. Makes sense too. It is also below the 65 round level if it were to break that, which at this moment is about 100 pip stop loss and about 170 target. So that's a good R2R, of course, indeed. You could even use 64.70 because that's just below the quarter of the quarter. Sometimes price respects the 65, respects round levels, but it goes a quarter around the round level. So the 65 level, could have a support zone from 64.75 up to 65.25. So if you want to be even more careful, you could go even to 64.70. It would make the stop loss 110 now plus minus versus 170 with slightly worse R2R, but slightly more protection. It's just a thought, but 64.80 is below the 65. So most of the time should work, I think. Specifically with the Kiwi, has lower volatility. So with a bigger volatile pair like pound yen, you might want to go a little bit lower, like 64.70. With New Zealand dollar, 64.80 probably would work well. Should be fine, I think. All right, so just give me 2 seconds. All right. Let's see. Yeah, and if you're waiting for more confirmation, you could wait for 4-hour candlestick patterns or the 4-hour break above the 21 EMA, for instance. All right, pound dollar is looking bearish to me. Everything aligned to the downside. Price trying to break below the 21 EMA, and I think if if there's a good momentum candle here, would like to see some momentum bar on the MACD. I'm not sure if we're going to get that though, but this or next one, or I mean, let me say it this way: the break plus the one candle after that. And let's see if we get the break. There's a fair chance, and I think that we are looking for a potential breakout here. What I'm looking for, maybe more importantly, is maybe just a candle below this 130.04 level and a close below it with a red candle and red MACD momentum. If it's not this candle, then the one after that is also fine. and that could signal the continuation. Lower, we are looking at a potential wave 5, this being corrective wave 4 here, ABC, and it could be continuing lower. So waiting for the breakout there, that looks pretty interesting. And if you don't have SWAT, you can look for candle and the MACD confirmation. So pound dollar, very interesting. I think dollar yen, of course, that's a little bit contrary to the Kiwi, that where the potential is for reversal. But those things don't have to be aligned necessarily. There could be more pound weakness than Kiwi weakness. We can look at the pound New Zealand. And what could often happen is that, for instance, pound dollar moves down and the Kiwi just kind of goes sideways or goes down a little bit, maybe hits that 5061.8 fib zone that we talked about, that is 10 pips from now, but ultimately doesn't move down too much. Then pound dollar moves more, pound dollar pauses, goes sideways, and then Kiwi starts to make the rally up. So sometimes this happens as currencies are waiting for each other to finish their movements. For instance, pound New Zealand technically actually looks bullish, which means that pound is stronger. But there could be maybe a bigger retracement. Maybe the 21 EMA zone is used as resistance, and there could be a bigger move down as an ABC, for instance, on the pound New Zealand. All right, that could explain maybe pound weakness and Kiwi strength. Although, of course, we don't know if the pound will break. That also remains to be seen, and we don't know yet. Dollar yen breakout also looks okay. It didn't look okay a while ago because of the fact that there was a big support zone here, right here. But now I think that, considering the fact that on the hourly chart price has gone sideways like this with an ABC, it seems like the reaction to that support zone was flat, sideways. And we've had a pretty good run down in the 4-hour chart with a lot of candles below the 20 EMA. So I think one more lower low is very possible. And I think we should get that probably to get divergence. And the target will be, I think, 109, looking at my wave analysis. So here too, a bearish candle with bearish MACD breaking below 109.60-ish with a good candle break, I think should offer a breakout situation to 109, and then that's maybe where we can get a bigger bounce. I still expect a bigger bounce personally on the dollar yen, because as we were already indicating up in here, this does look like a flat correction. Maybe this is correction 1, this is correction 2, and down it goes for correction 3. And this third correction doesn't have to always finish right at this bottom. It can break that bottom a little bit, which already it has done. But then once it finishes that 3-wave correction, we're expecting to move up again. Question is how far this third wave will fall. 109 could be it. But if it breaks by 109, you don't know. It can go even further, of course. Let's put a fib from here to here. And we might get correction even lower, maybe 108.36, maybe 107.50. All right, but eventually we would expect a bullish bounce and reversal, as we think that this is a correction, or I think that this is a correction and this is a new uptrend correction. So uptrends should continue eventually. All right, Euro Yen. To me, this looks like a potential pullback for one more wave up. But yeah, it doesn't have to be that this swing is finished yet. It could be that this is maybe wave 1, 2, 3, and this is a 4 and one more lower low. So maybe I was a little bit too quick on claiming that this is the end of my wave A. So maybe so soon. If you look at my wave analysis in the meantime, so should have maybe been a little bit more cautious with that. So yes, I'm open to one more lower low here, and for price to go maybe down to WIS 5. So I think that this breakout candle wouldn't be that bad either, to be honest. But I think the dollar yen might still look better. It depends a little bit on this euro dollar too, of course, and which direction it chooses. If it stays above 112 or breaks below 112, if the euro dollar moves up, then the euro yen might not go as much down as the dollar yen, for instance. Sorry, this one. So yeah, this breakout could be good, but if depending on how the euro dollar goes, it could be good and wise to exit the trade at one point if the euro dollar is looking to bounce up, right? And then just cut the trade short, maybe at break even or even some small profit or a small loss. Pound yen maybe looks better because the pound looks weak. So pound yen could look better, and this candle is not looking that bad. Still 37 minutes left, but so far looking like a pretty good candle, and has not been able to break above this 21 EMA, acting as resistance, moving averages aligned, and clear momentum, correction. This could be the continuation breakout on the pound yen. So maybe skipping that euro yen and then just focusing on the pound yen, pound dollar, or dollar yen could make more sense, in fact. Let's take a quick look at this euro pound. Looks like the bulls have control at this moment with bullish candles. Dollar CAD. All right. This breakout didn't go anywhere, and failed to really move anywhere substantial. And don't see anything interesting at this moment. I do think that if it does break above the 21 EMA, that's the fourth attempt, and then there's always a fair chance that the breakout indeed could continue higher. AUSD did make this break below this trend line. Didn't go too far. Very slow, low volatility, slow movements. Made a pullback, now continuation. Personally, would not trade it anymore at this spot. But if you're still in that, then you can move it to break even, I guess, or just above this weekly pivot point, maybe just above that 0.700 round level, and just see if it can continue for a lower low. Right? It is aligned to the downside. There is divergence between these bottoms, just like the Kiwi too. So not sure how much you could push lower. Kiwi we discussed. Euro New Zealand. I don't see anything interesting with these pairs. Pound out, I was looking for a break to the upside and a break above the 21 EMA. That didn't happen last week, but it could still happen this week. But that said, the pound is looking very weak to me at other pairs. So I don't, from that point of view, I don't like that idea as much anymore. I mean, technically on its own right, it does look good for a breakout, but maybe better to wait for a break and pullback just in case. Because pound yen, pound dollar really look weak to me. I don't know. So got to be careful with that. Let's take a look at that gold. Ali is mentioning short at 1288. Stop loss 1294, TP 1255. Daily 200 SMA 1255. And already took a profit on the trade earlier. That's great. Great stuff. Great job. So let's take a look again. We were wondering if this is a wave E. For it to be a wave E, it's going to have to expand a little bit further down, or at least sideways in time. A little bit, at least. I mean, just wondering. Let's see. These are 18 or so weeks, and so far this has been 13. At least a few more weeks would be good. Now this is really a short wavy, and if it were to move up substantially, it would probably not be a wavy, probably be something else. But we're expecting wavy, and therefore the downside is, for the moment, I think indeed more likely next week's, as price is testing maybe, for instance, 61.8 fibs at 1250, 1230. Moving averages are flat here. So if price does break, good chance the price will revert back. That's valid for bullish break and bearish break. So if it does make a pop down, it could easily revert back up again. Daily, I was definitely bearish, as you know, and price has been moving lower, but it's kind of like being squeezed in between the 144 and 21, and the downside pressure is not as much as I thought it would be. And the downside is looking pretty corrective. This is an interesting analysis from Ali, who mentions that gold tends to drop in May until June, July in recent years, with dips in June, except of 2016 with Brexit. Very interesting information. And I wonder if it's correlated to the stock market, which tends to do less well after May. During the summer, typically does best until May, and maybe stocks are exited and money goes into gold. No, wait, that would actually increase the price. Sorry, it's a dip. It's the other way around. That's interesting, actually. I don't know why. That doesn't, my idea doesn't match, actually. But anyhow, so let's see if we get that again. I've been definitely bearish, and I think that bearish wave V is possible. It's just that this is a little bit slower than I expected, and I'm wondering if this is not an ABC finished here. Double bottom, double top. Definitely price is going flat at this moment. Yeah, I think it probably depends on the breakout direction. If it does break to the downside, it could just be a consolidation zone, and as price was retesting 144 EMA. This looks like momentum, actually, correction with momentum again. So I'm not sure if it's going to get up to 1288 again. It could. I'm just wondering if it does get up there, if that's not changing the character of it. It should move lower, actually, now. So I'm not sure if it's going to get up. If it does make a retrace, I'm wondering if it wouldn't bounce earlier, basically, at the weekly pivot point, for instance, 1286, and then move lower like that. But yeah, 1288, I think it should be okay still, as maybe head and shoulders here. Should be fine. I'm just wondering if it will get there at this moment. It depends on whether it's going to break here or not. If it does break, there could be a faster move down, maybe to retest this bottom again. So yes, I think it's okay. 1294, 1255, and there's a fair chance that this is just an ABC correction within the downside, and then it continues for a lower low. Indeed, I just wanted to check this. Be critical of this pattern, but and why it seems to be taking longer. But I think And whether I just was wondering if this is not an ABC finish, then this is maybe a bigger upside. But that would only be valid anyhow if it breaks above 1290. I think 1291 ish, 1292. So for the moment, I don't think I have to worry about that too much. I think there's a fair chance that this should continue lower, at least that this is a bearish bouncing spot for a retest of this bottom, and then should break the bottom to expand the wave V for a lower low indeed. 1250 next target. Makes sense to me. Whether it goes up to 1288, I don't know, 50-50, I guess. Depends a little bit on this 21 EMA. If it breaks below it, then I think there is a fair chance it might move a little bit lower, make a retrace, and then finish the move towards the bottom. If it bounces here, then yes, 1286 or 1288 is possible. I wouldn't want to expect more than 1289.5, 1290. If it breaks above that, that would be a little bit, changing the character of the structure here. All right. Stock indices finally made it to the 144 EMA. So we did see some bearish continuation, and there has been wicks at the 144 EMA of this daily chart. And last week, a lot of volatility, somewhat of a doji with wicks on both sides. All right, that's about it, I guess, for the moment. Hopefully we'll get some more price action and price movement in the upcoming months. You never know. Sometimes June, July have pretty good movements. August tends to slow down in general, but there have been exceptions as well. And I don't know, with such a low volatility, maybe this year could be an exception. Let's see. In any case, Nen is going to be back tomorrow, and I'll be back on Wednesday. Nen again on Friday, of course, usual schedule, and we'll talk to you in the ECS Live channel. All right, see you soon. Cheers.